Hey guys, Scott here. Remember back on the 1st of October last year when the government rolled out the expanded 5% deposit scheme? They came out and said, look, we know this was meant to start in January, but we're bringing it forward because Australians need help now. This is the fix. This is what's going to help everyday Aussies finally buy their first home and get their foot in the market. That was the pitch. And at the time, a lot of people believed it. A lot of people cheered and thought, finally, something is being done. Because let's be honest, owning a first home isn't some wild ambition anymore. It's the baseline. It's what people need just to feel stable. Now here's where things get uncomfortable. We're 4 months into that policy, and Australia's biggest real estate data company has just released its latest numbers. And there's one chart in particular that everyone in the industry is talking about. And when you actually look at that chart, when you really sit with the data, it forces a very uncomfortable question. Is the government actually helping Aussies buy their first home? Or are they making things a whole lot harder for everyone? Because this data tells a very grim story. And once you see it, you can't unsee it. So stay with me because I'm going to walk you through that one chart, what the numbers actually say, and what this means for the housing market headed into 2026. I'll also cover what buyers and investors should be thinking about next. And a quick one before we get into it, I do these videos every single day on the property and the economy. So if you want daily updates and you don't want to miss what's really going on, hit subscribe and click the bell. Okay, let's get into it. Let me start with the chart everyone's talking about. This comes straight from Cotality, Australia's biggest real estate data company. No opinions, no politics, just the raw numbers. What they did was simple. They split the housing market into two groups: homes that fall under the new 5% deposit scheme price caps and homes that sit above those caps. And here's what they found. In just the December quarter, homes under the scheme price caps rose 3.6%. Homes above the price caps rose 2.4%. That means the so-called affordable end of the market is growing 1.5 times faster than the rest of the market. Not over years, this is in just 3 months. And this was not a one-off. Cotality looked at nearly 90 regions across Australia. In 89% of them, homes under the scheme price caps outperformed everything else. That's not a coincidence. That's policy showing up in prices and in the data. Now, this part is really important. None of this should surprise anyone. Every serious housing study, both in Australia and overseas, has shown the same thing for years. When you boost demand without fixing supply, prices rise every single time. Australia has spent more than $20 billion over the past decade on first home buyer grants, stamp duty concessions, and demand side schemes. And what did that do? It didn't suddenly make housing cheaper. It didn't unlock new supply. It didn't create more homes. What it did was bring buyers forward from the future to now, squeeze them into a very short space of time, and push prices higher. And here's the key thing people miss. Investors, parents, and experienced buyers see these policies coming. They don't wait until the policy starts. They position before it kicks in. Cotality actually pointed this out. The price divergence started before October 1, which tells you buyers were already moving early to get ahead of the surge. This is not a bug in the system. This is exactly how the system works. Okay, so let me share an interesting insight with you. Before October 1 even arrived, mortgage brokers were already seeing a surge, not just from first home buyers, but from mum and dad buyers. Parents with kids in their late teens and early 20s were rushing in to buy an investment property before the scheme kicked in, not to rent forever, but with a clear plan to sell it to their kids, hand it over to their kids. In other words, this policy didn't just pull today's buyers into the market, it dragged future buyers forward as well. So now you've got first home buyers, parents buying on behalf of their kids, and investors all competing for the same lower priced homes. That's how competition explodes at the affordable end of the market. And of course, this is showing up in the data. Now let's talk about who really wears this. First-time buyers don't shop across the whole market, they shop at the entry level. That's where borrowing power, deposits, and serviceability force them to be. So when you inject thousands of new buyers into that same narrow band of housing, competition will explode. Cotality's data shows this really clearly in Sydney. Homes under the scheme price cap rose 2.3% in one quarter. Homes above the cap actually went backwards slightly. That gap is the market screaming where the pressure is. And this is where the policy becomes completely self-destructive. The scheme is designed to help buyers enter the market, but the moment it does that at scale, it pushes prices up faster than wages can keep up. So the very people it's meant to help end up chasing a moving target. At some point, you have to ask the uncomfortable question, is this actually helping people buy homes? Or is it just inflating the last affordable segment even faster? Because owning a first home isn't a luxury, it is a basic human right. And right now, that right is getting harder to reach, not easier. Okay, now let's zoom out. The government keeps talking about supply, but approvals aren't homes. Announcements by the government aren't completed homes. Right now, dwelling completions are still well below where they need to be. And even when approvals rise, it takes around 1 year to actually deliver a finished home, sometimes 2 to 3 years. So here's the real question. What are renters and first-home buyers supposed to do between now and then? This is why the crisis feels endless. In the housing market, the help or the new supply always arrives after the damage is already done, after the market is already cooked. And while supply crawls along, demand keeps getting piled on. Population growth, migration, first-home buyer schemes, shared equity schemes, everything pushes demand forward. Almost nothing fixes supply fast enough. So where does this leave us headed into 2026? It is very, very clear. The market is splitting. High-end homes are slowing. The affordable and middle segments are being set on fire. And government policy is actively steering buyers into the most competitive part of the market. That pressure will not disappear in 2026. It will compound. More buyers will be chasing the same stock. More competition, more upward pressure. This is exactly why Cotality says the scheme has added fuel to the fire. So what does this mean for you? If you're a first-home buyer, the uncomfortable truth is this. Waiting hasn't helped anyone over the past few years. If you qualify for the scheme and you can buy, use every tool available to you to get into the market. Expand your search, drop the idea of the perfect home, stop waiting for a perfect 20% deposit while the market keeps moving forward. Getting your foot in the market matters more than timing it perfectly. If you are an investor, this data tells you exactly where the pressure is building. Demand isn't going away, supply is not going to catch up anytime soon, and the entry-level segment is where competition is going to be the fiercest. That's not a moral judgment, this is just what the numbers say. Before I wrap this up, I generally want to hear from you. What do you think happens next? Do you think these policies actually help first-home buyers? Or do you think they're making the problem worse? And how is this impacting your own decisions? What experiences are you seeing out there in the market right now? Are you waiting on the sidelines or are you making a move? Drop your thoughts in the comments. I generally want to know. And if you want daily updates on what's really happening in the property market and the economy, make sure you subscribe and hit that bell so you don't miss anything. That was your daily property update. I'll see you at the next one.